everybody, Simon Black here. It's Wednesday, March 4th, 2015. Beautiful place. And, as really a professional investor, Tim focuses on value investing and really big picture trends and how to make money from big picture trends. And really, Tim's a guy who looks at stuff and he says, okay, when this doesn't make sense, I need to figure out how to make money from this. And you've been able to do this sort of time and time again, just to kind of give people a context. I mean, we were talking about this before. I think Tim literally called the top of the silver market, at least as it was back then, within 6 hours of silver's high. This was back in a couple of years ago now. It was something that, again, nothing goes up and down in a straight line. And I think we probably can both agree that, over the long term, silver's going to go much, much higher. Gold's going to go much, much higher. But when we saw this crazy run up in silver, it kept going higher and higher and higher every single day.
Parabolic.
Yeah, it just, that doesn't make sense. That's not supposed to happen. And he said, this can't continue. This is not sustainable. And it got to a certain point where it's so high, he said, okay, time to sell. And that was literally within a couple of hours of the all-time high. Of course, there's a lot of luck involved there.
Yeah, there was luck involved.
But the point is that just to give folks a little taste of what you really do is look at these trends and see not only what doesn't make sense, but how do you profit from something that doesn't really make sense. And we want to talk about that a little bit today because now we're both in Asia. I've been in South America for the last several months, mostly, we're spending a lot of time focusing on rather substantial agricultural investments there. We're deploying a lot of capital right now in very high quality farmland in South America. This is one of the best places to be if you're interested in buying land. The quality is incredibly high. The price is extremely low on a cost comparison relative basis. You get full land title, you get water rights. There's a lot of really great things about that story, which we can talk about that another time. And of course, I was also getting my days in for residency in Chile, which is a fantastic place to pick up residency. It's very easy for anybody to obtain temporary residency. And then in order to qualify to apply for permanent residency, you only need to make sure that you've spent less than 180 days out of the country in the first year of your residency. So in other words, once they give you temporary residency, for the next year, you have to spend roughly 6 months in Chile. So I was getting my 6 months in. That was an important thing. But as soon as I did that, I hopped on a plane and I had to get out of the country and go check out what's happening in the world and meet Tim over here and see what's happening in Asia. I had a great time in Hong Kong and Singapore and came up to Thailand the other day. And as I was driving from the airport on the big motorway from the airport in the main airport in Bangkok into the city center, I passed a sign, and it was an advertisement, a billboard for the Bank of China, and it said China Renminbi New World Currency. And it was something that I thought was so profound because they were basically, this is now, almost an official advertisement to say, we know that we're the future. We know that we're the big news now. And it's true. And I think, anybody that just sort of looks at basic fundamental data out there in the world can see that the current economic power in the world, the United States, is marred in debt and slowing growth and so forth. You can't have $18.1 trillion in nominal official debt, let alone the tens of trillions of dollars in overall your sort of balance sheet liabilities. And this isn't even my number. I always like to point this out, that the U.S. government itself puts this stuff in its own financial statements and sends it out to the entire world and says, look, our net worth is negative tens of trillions of dollars. This is crazy. You can't have that and still be the dominant superpower in the world. So the next obvious option really is China. And as we wrote about yesterday in Notes from the Field now, it's only 17% of Americans still view the United States, according to Gallup, as the dominant economic power in the world. And that's a really telling indicator. Now, if you have people in the United States who view that the United States is no longer the dominant economic power, and people see that China is the rising power, and China is basically putting out its own official advertisements. This is something that's really going to happen over the long term. When we talk about these big picture trends, this happens from time to time. History is full of examples of once dominant economic powers that sort of fade and decline, and sometimes they become number 2, number 3, number 5. Sometimes they just disappear altogether. But either way, these are things that really affect people's lives. And this is, even though, only 17% of Americans still think the U.S. is the number one power in the world, so there's 83%, let's say, who don't or who aren't sure. I would imagine most of those 83% don't understand really what that means. Is that the dominant economic power means having the dominant reserve currency in the world. And if the U.S. loses its dominant status, which it is, it's happening, and as the U.S. loses that, then it means that the dollar is no longer the world's dominant reserve currency. That has massive implications to almost everybody, not only in the United States, but even people around the world. Because now you're talking about the reason that the United States is able to print so much money and go into so much debt is because it is the dominant reserve currency. People around the world have to own dollars. And if that changes, and suddenly now they say, you know what, I'm just fine, I can just own renminbi. Suddenly, if they don't have to own the dollar anymore, then they stop buying dollar-denominated assets. They stop buying U.S. government debt. Suddenly, the Federal Reserve, when it prints all this money, doesn't have a way, a place to sort of stuff it all. They can't ship all these dollars overseas. In fact, a lot of the dollars they've shipped overseas now start coming home. That has substantial implications for people in the United States. They can't have ultra-low interest rates. And what happens, to growth levels? Growth levels they're barely registering positive growth. Well, interest rates are basically zero. And what happens if they have to raise interest rates as a result? What happens if all of a sudden all this inflation comes home to roost? I mean, these are things that I think most people aren't prepared for. It's one thing to understand conceptually that the United States might be no longer the number one economic power in the world, but it's another thing to experience it. And these are things we always try and point out to people. Say, look, these are huge trends. These are earth-changing, life-changing trends. And it's not to say that the world is coming to an end, because it's not. We're fundamentally optimists. We see a lot of opportunity in the world, but the world is changing. And it's important to always keep that in mind. And anytime there's great change, there's significant turmoil out there, there's huge transfers of wealth and power from one region to another that really brings a lot of opportunity. And in the same way, if you had been in the Ming Dynasty, hundreds of years ago, when China was, the largest economic power in the world, but they were in decline back then, and the West was rising. And if you had known that, if you could sort of see the writing on the wall, you could have sort of positioned yourself to benefit from that. It's the same thing happening now, really. We can see certain powers declining, other powers rising, and I think for folks that position themselves accordingly, there's really a lot of wealth and prosperity to create here. But nothing goes up or down in a straight line. And this is really what we want to talk about today, is that, even though we can look at the writing on the wall and see that China is becoming the dominant superpower in the world, and the renminbi is, could very well potentially be, the dominant reserve currency. It's growing from embryonic levels at really exponential rates in terms of its adoption as a reserve currency. This is really happening on a very rapid scale. But something very interesting has happened simultaneously, because, again, nothing is going up or down in a straight line. And the renminbi now is falling. And this is something that is happening because China is undergoing some serious economic stress right now. Again, nothing goes up or down a straight line. China's economy has been rising and rising and rising. But, you and I have both sort of written about this extensively. You were writing about this a lot, going on all these trips. And Tim was actually going and looking at these ghost cities and train stations with no passengers and bridges to nowhere. I mean, you're talking trillions of dollars of misallocated capital, and that has consequences. And we're seeing now, it's taken several years, but we're now seeing the consequences of that. And it's an important lesson that misallocation of capital, destructive spending habits have consequences. Maybe not right away, but eventually they do. We're starting to see this now. Let's talk about a couple of things in China that we're seeing right now, sort of the telltale signs of economic strain.
Well, the economy is certainly slowing down, and even the government's propaganda machine is massaging down people's expectations. China's been growing at double-digit rates for the last 15, 20 years. Growth has decelerated substantially. The government didn't even want to commit to its previous target of 7-8% growth. They're really managing expectations down. Exports are slowing. Property prices have started falling. You're actually seeing defaults on debt happening in China for the first time.
That's been astounding for the first time, really, in modern history.
Clearly, it's a slowdown as opposed to a recession, but in China it feels like a recession simply because they've been growing at this breakneck speed for decades.
Right. I mean, no matter what, even if when governments say, "Oh, our GDP is growth is X%," I mean, none of that stuff you can actually really believe. How do they really know? But the point is that when they reduce their own numbers, oh, there we go, coffee machine.
That must be our coffee company.
Yeah, it must be. When the government reduces its own numbers, suddenly, that's really a telling sign. Even if their numbers are inflated, when they start reducing their own numbers, that really starts telling you that something's wrong.
Yeah, that and it tells you they're worried. They know that something bad is coming in the short term.
But we've seen a lot of other signs as well. I mean, we're seeing, the central bank has been slashing interest rates.
Money has been flowing out. All the wealthy people are looking to diversify internationally, taking their money out of the country.
Right. That's really a massive one. There's substantial capital flight out of China right now. People are picking up their cash. I mean, the wealthiest man in Asia sold all of his assets in China and moved his money out. I mean, that really tells you something. People in China, businesses and so forth, people are moving their money out. They smell blood. And they're looking to do something about it. And really what's happened is we've seen a substantial slowdown in China. We've seen the currency weaken. And Tim actually really came up with a fantastic way to play it. He's sort of been warning people for a long time. He told me back in May we did an event for some members of Sovereign Man Confidential and Total Access down in Dallas, Texas. And I remember he told me before, he called me on the phone and said, make sure you tell everybody to exit their renminbi positions. And so for a while the message was, don't get involved, don't own the renminbi. But a couple of months ago, the message changed, and now it was no longer not only don't get involved in the renminbi, don't own the renminbi, but now it's, hey, let's make money from its decline. And again, I think you've pretty much nailed that almost at the at the peak.
It was back in December, yeah.
Yeah. So the interesting thing is you came up with a unique way to play it, where we really sort of limited our downside risk, and at the time, the instrument that we were using to buy that was trading at about $15 to $20.
Yeah, $15 to $20. That's right.
$15 to $20, and that was on December 9th?
Yeah,
right?
I think that was when we first issued a buy alert.
A buy alert on that one. And how much is it now?
It's been trading as high as $75.
$75. Yeah, so 15. Yeah. It's $15, $20, all the way up to $75 in just 3 months. I mean, that's an astounding, and really where we've basically been able to make our subscribers 5 times their money on this with limited downside risk. What's a way that somebody would really be able to play it? I mean, you came up with a very unique strategy for our premium members. If somebody's not a premium member, there's some other ways to do it. For example,
you don't actually have to open bank accounts in China or anything like that. There are a bunch of ETFs that trade in the United States where you can invest in the Chinese yuan by buying them. The other side of that, of course, if you think that the yuan is going to weaken,
that's what we're looking at.
You would have to short sell them.
Yeah. So
something that's like a perfectly legitimate strategy. Yeah. There's 3 of them that I know of. For example, the market vectors, Chinese renminbi.
CNY is that one. That's an ETN, so somebody would have to really go out and short that one.
Yeah, you need a broker who can short sell stocks.
You need a broker who can short sell, and we don't generally. That's not our preferred way to do it. We didn't get our premium subscribers into that because there's some counterparty issues involved with that, and these ETNs are very very difficult things, anyways. But oh, thank you. Yes, please. I'm just getting lunch now. But that is an option for folks that want to capitalize on this. Is looking at something like market vector CNY and doing a short sell.
Yeah.
But just to be clear, I mean, we're not necessarily long-term bearish on China or the renminbi. What we're ultimately looking at here is these short-term fluctuations.
That's right. Because, as you said before, nothing goes up in a straight line, and there are opportunities along the way to ride the counter trends. And I pick my spots quite carefully. I don't put on a lot of trades, but when I do put them on, it's something that I have a lot of confidence in. And this just happened to be one of these situations where all the data that I was looking at was aligning, and to me, it was just a no-brainer that the yuan was in for a short-term decline.
Right, and that's exactly what happened. Again, I think
it is still happening.
You nailed it within even probably a couple of days of its decline here. It's still happening. We think there's still, if you feel like you missed it,
not at all. There's more downside ahead in my view.
Yeah, there's more trouble for China, which means that for folks that they get into this trade, there's probably a lot more upside available. So one actionable recommendation for you guys, if you're interested, if you're a premium member, definitely check out. Tim, you're actually going to send an update with another way to trade
it. There's another opportunity that I'm liking the look of getting ready.
It's kind of on the similar theme.
It's very similar, but there's
shorting China essentially. Yeah. So there's some opportunities. So if you're a premium member, watch out for that. Again, this is just an example of the kinds of opportunities that are out there. Significant change is always going to bring about significant turmoil and opportunity, really. And so it's being able to capitalize on those opportunities makes a tremendous difference. We have to look at these big picture trends, and sometimes looking at these big picture trends means taking care of what we have already. It means we need to protect what we've got. We've worked very hard for what we've achieved, and so it makes sense to distance ourselves from bankrupt, desperate, out of control government. It makes a lot of sense to do that sort of thing. But occasionally, it also means going out looking at these sort of lower risk, no brainer opportunities when there's a big picture trend that we can actually make money from. And
that's another important point about what I've actually been recommending for our premium members is that you can certainly lose money on this trade if I'm wrong, but your downside is strictly limited. I mean, you can decide, okay, I've got $2,000 that I can afford to lose in return for $10,000 of upside, but you're not going to lose a penny more than that. You can really limit your risk.
Yeah, and that's always an important point, I think, and that probably deserves another podcast in and of itself. I think a lot of people.
Core tenet of the way I invest really is it's more about avoiding the downside
risk. Rule number one is never lose money.
Correct.
And so what I think a lot of people forget about is that there's such a thing as an investment return, but even more important than that is your risk-adjusted investment return. And I see people sort of retail investors piling into stocks at their all-time highs. That's just not a winning investment strategy.
A lot of risk with that strategy at the moment. It might be working short-term, but you're really opening yourself up.
You might be up, You might be able to go up, 10, 12%, but you're also looking at, being down, 70 or 80%.
If the music stops.
Right. And so that's a very difficult position to be in, and we saw how quickly that can unwind. And so it's always important to look at your risk when you're making investments, when you're allocating your capital, and don't just simply assume that, things go up and down in a straight line. The renminbi isn't going up or down in a straight line, and so we've been able to sort of pick up on a really good opportunity on going on the short side. Stocks are certainly not going up in a straight line, and the fact that they've been going up and up and up so long to me sort of suggests that every day increases the amount of risk of a substantial decline. So just always bear that in mind. It makes sense to look at risk-adjusted, tax-adjusted, inflation-adjusted returns, and this is what I always look at. In stocks, it's say, look at if you bought stocks. I went back and did the analysis maybe a month ago. If you bought stocks, with even a couple of years of the all-time high, back in let's say 2000, you were really looking at a tiny return. Once you strip out the taxes, the capital gains tax that you would have to pay. Once you strip out the rate of inflation, you're looking at less than 2% return, over the last 15 years. And you have to look at that and say, was it really worth it?
I don't think it was worth it.
Was it really worth the stomach-churning ride up and down for 2%? I don't think it's really worth it. And so, this is something that I think everybody needs to consider: risk-adjusted, inflation-adjusted, tax-adjusted returns. And so you always want to try and find ways to do that. Limit the amount of taxes you pay. Yes, there are plenty of legal ways to do that. In fact, I'm going to be in Puerto Rico next week. Nice. We're going to tell you guys a lot more about ways to adjust, ways to actually reduce taxation on investment. There are always ways to do that, legal ways to do that. I've been very clear. I think we all have a moral obligation to reduce our taxes because governments have a history of an unblemished track record of taking tax dollars and spending it on bombs and drones and wars. And I think we have a moral obligation to reduce the resources that they have.
Starve the beast.
Right, starve the beast. And I think, again, limiting the taxes that you pay, limiting inflation. Again, that's something that we can sort of allocate within our investment portfolio. And of course, limiting the amount of risk is all about choosing wise investments where we have limited downside. And so definitely keep that in mind. I would encourage you, if you're just invested in in whatever the latest fad trend is right now, definitely give that some thought and look at sort of what are the big picture issues out there, and if there are ways that you can profit from those.
Thank you for watching. Please subscribe to us on YouTube, Facebook, and Twitter. You can visit us on www.therealthingming.webs.com.